So, welcome to today's podcast. I think you guys are in for a big treat today. We're always trying to share some unique sort of insights from experts in all different areas of wealth building. It can get very complicated. And so, this is why bringing on experts is really what I'm trying to do as part of this show, to really introduce you to new concepts that are just not in plain sight for most people. So, I have a special guest today, Jesse Raynes. He's the managing partner at Inception Financial, and I had the pleasure of meeting with him and getting to know him over the course of this year. I'm really excited for you guys to learn a little bit more about him, his financial practice, and some of the unique things he's bringing to the table to help his clients. So, Jesse, thanks for joining me today.
Yes, of course, Tom. Wonderful to be here, and hello, everyone.
Wonderful. So, Jesse, I know we've been back and forth. We've been on vacation before we started recording this. Now you're back in the Connecticut time zone. So good to have you kind of here. So Jesse, before we get going on anything specific around any unique strategies or approaches, can you tell our listeners here a little bit about your unique background? I know it's kind of in different areas and kind of what got you to where you are with Inception Financial.
Yes, I have a very interesting career path. I mean, this will be a sort of trivia bit for some folks. I actually started out as a professional actor over 2.5 decades ago, and had some success as a young fledgling artist in the Hollywood industry for a while, and then put that career sort of on the wayside. May go back to it eventually someday. Who knows? Just for fun. But for the last 2 decades, I have been an executive in the solar industry. Started my career with a company called Solar City, and that was a company that Elon Musk had put up the seed capital for, and his 2 cousins ran it. I was employee, 600 or so, and really scaled the residential solar market across the United States. We're the largest solar company on the planet for quite some time. And fundamentally, what we were doing was just allowing homeowners to buy electricity at a lower cost that came from a renewable source. And many of the homeowners, they did not actually own the solar system that sat on their rooftop. They just bought the electricity. Our company owned that asset and we sold it to them. But really behind the scenes, Tom, what we were doing was we were selling all of these assets off to Morgan Stanley. They were the first large institutional buyer buying these at scale. And then, other organizations like US Bank and now Bank of America, and even corporations like Google and Apple own these assets on their balance sheet for the same purpose that we are offering to our clients, which is to offer a very solid and sound tax mitigation strategy. And so now Inception Financial was formed just over 3 years ago, going into our 4th year, and we decided to focus solely on retail clients like your clients and those listening in on this podcast. Instead of working with the large institutional banks. It's the same structure that's been around, as I said, for numerous decades, but most retail clients just don't know about it because most of these large institutional banks have really held the opportunity captive. So that's my background sort of in a nutshell, if you will.
That's awesome. So this is where you saw a lot of the big players who are taking advantage of something like this, and we often talk about this on this podcast too, is kind of shifting sort of our mindset and sometimes our paradigms, the way how we look about wealth building. And what I take from it too, because I've read this is a good book for folks who listen here. It's a good one. It's called The Win-Win Wealth Strategy: 7 Investments the Government Will Pay You to Make by Tom Wheelwright. Really fascinating stuff. And one of those areas is energy. Right? Our government wants us to invest in certain ways. They incent us. And this is just one way to help encourage what our government wants us to do, right? To help push alternative investments. And it's really cool that you and your company kind of helping folks take advantage of this as well and get some tax breaks out of it while actually helping sort of support any government initiatives to improve the economy and our environment. So it's really cool. So
Yeah.
Tell us, from the vantage point of solar, because I mean, even for myself, I hear enough about it, but it's still kind of an early sort of industry, right? Tell us kind of where we are in the solar industry as a whole.
Yeah, great question. When I started this in the industry back in 2008, I mean, that was really early days, and there wasn't a lot of financing available for homeowners, and so the biggest impediment was the large upfront cost it took to acquire and buy the equipment and put it on your roof. And that is really something we did in those early days at Solar City, which then eventually merged with Tesla and made it more affordable, so we could grow the industry at scale. And I thought, I grew my specific region from 14 sales professionals to over 1,000 sales professionals in a matter of 4 years. I thought, we were peaking at that time. I left, Tesla in 2017, and even still today, here we are in 2023, and we're really just scratching the surface. I mean, we have an incredible run ahead of us. The government just signed into legislation through the Inflation Reduction Act, the investment tax credit, which is what our customers qualify by owning these assets. And that is in place now for 10 years. It's the first time in the industry's history that we have a decade of certainty. Many of these credits, it's part of general business credits that the IRS offers, come up for renewal every few years. Congress has, for most of these credits, just continued to extend them. But this is the first time we have 10-year certainty. So the future is very bright, no pun intended, for the solar industry writ large.
That's awesome. It's so ironic too, because I look at this and I know it's an area that, certainly my wife and I think about too, is like what we can, do to help obviously the environment and, and seek out alternative sources too, and certainly become energy independent. So this is a really cool space to learn about. And it's like cool to be part of kind of the early stages of it. But for folks who are thinking about this, right, this isn't, and you mentioned it earlier in your sort of history background, this investment you're offering is not actually putting solar panels on your roof, your personal roof, right? Because that happens. You see that across folks. That is a possibility. I've looked in that myself, and numbers were not quite working out perfectly for me. And this was years ago, so it may have changed a bit. But you're actually offering this as a sort of investment for potential folks who are looking to kind of buy assets that you're going to put on other people's properties. That's right. Is that what I understand?
That's correct. So this is not an opportunity for your listeners to look at acquiring solar for their own home. Of course, I think that's always a very solid option for most people, but there are lots of companies that do that. What we offer is the ability for your listeners to purchase these assets, and they might own a dozen or they might own hundreds of these assets. And the business started with me and our other managing partner, Ryan Hamilton, buying these assets ourselves to solve our own tax problem. We were very fortunate where we had, a very large tax bill, and we were looking for ways to safely and securely offset that tax liability through another means. And so we started buying these assets for ourselves, and then realized very quickly that there's no one out there really at scale who's educating retail clients like your listeners that this is even available. And given our longstanding history in the industry, we have the relationships with the sales channels and the contractors who are installing these assets on residential rooftops who wanted to work with us. And so we sell these assets to our clients directly in an asset purchase agreement. So this is not a fund. It is not a security. So there's no need to be an accredited investor. If you pay taxes and are looking for ways to lower that overall tax bill, this is something that we can do for all various households. So that is the fundamental structure, is owning these assets. Think of it in a way as setting up a small side business, one that doesn't require a ton of time, but a modicum amount of time to get what we think is a substantial amount of tax savings. And as we know, Tom, when you're saving money, it's the same thing as making money. And the really nice thing about this strategy is when you save money, it's on a post-tax basis. So it's also leveraging, or I should rather say repurposing, the same dollars that are now being given to the IRS, whether that's through withholdings from a paycheck. There are W-2 clients we have, or those who pay quarterly estimated taxes or pay annually. It's that amount of money that we're looking to repurpose and say, hey, instead of writing those checks to the IRS, they will allow you to redirect it and buy these assets with those same dollars. And in doing so, your overall out-of-pocket expense is going to be greatly lower than what it would be with the status quo of just giving it to the IRS.
Yeah, that's really cool because to your point, that's probably why this was sort of at least initially set up I guess this sort of opportunity is for the big players because they maybe have the infrastructure to be able to support this and get providers to kind of act as kind of, I think of it like a turnkey provider of this sort of business, right? You don't imagine trying to individually try to set up a business like this, to buy assets, to get it installed, to maintain it, all those things that come along with it. It's probably not possible, right, for the everyday homeowner or person, even a small business owner, right? They're too busy with other things to take so much activity and be so active in something like this. So you try to make it simple for them.
Yeah, that's right. And that's usually the phrasing that we'll use. This is a turnkey opportunity that you offer to our clients who are mid to high net worth, some ultra high net worth clients who are looking for ways to, mitigate the amount of taxes that they're paying, but don't know the first thing about solar electricity or how to run a solar company, if you will. So our process is very straightforward. As I mentioned, we sell the assets to our clients. They have a business entity established, such as an LLC. And for those clients that don't have one, we have a paralegal team that can help set that up for them. And then we sell them the assets using a purchase agreement, just like buying an automobile, no different than if it was an electric vehicle, let's say, right? When you purchase that asset through a business entity, you can depreciate that asset and then also apply for the underlying tax credits. And so that's the structure. And then we also sign a service agreement with our clients so that we will maintain all the operation of that asset, ensure that it's delivering the proper amount of power. We take care of any if there were warranty issues or obviously all of the property owner items that might be addressed. We're handling all of that heavy lifting for our clients to make this very turnkey. And then, of course, we help our clients sell the assets when they're ready to exit the investment. So from soup to nuts, A to Z, we have everything covered, including the insurance provisions and all the necessary protections one would expect to have when running such a business as this.
Yeah, that's great. Yeah, and that's one of the things too. I mean, they're all kind of unique. There's unique approaches to sort of handling, like you said, taxes like that. As you get more successful in your careers or your business, it becomes a bigger issue. And so for an opportunity like this, as the incentives from the government, deductions, credits, but to your point, you said there's even a possibility for some level of cash flow, longer term, if possible. There might be, right? But that isn't the biggest sort of thing.
That's correct. There are basically two fundamental benefits that are part of this structure. The first is the tax savings that our clients are going to get. And as I mentioned earlier, repurposing money they're already spending to buy assets and then saving on what would otherwise be going to the IRS. So that's very sound in and of itself. And then there's also a cash flow component to this from the payments for the electricity that the property owners are making. So there are really two forms of benefit, a tax savings component and then actual cash flow in yield. But most importantly, we're not asking our clients to go sell Apple stock or to, diversify their portfolio for the things you may have them invest in or any other wealth managers for that matter. This is actually freeing up cash that they have to spend. And now that they have this additional savings of cash, they can then take that savings and go and reinvest that into the other vehicles that they're comfortable with. So it's a really nice structure to leverage money that's got to go out the door anyway, right? Into something that'll save you money and then also deliver a nice yield component as well.
Right. Because to your point, that in terms of if you're a W-2 employee, you're getting money withheld anyway, and so you can make some adjustments there. And if you have, a small business owner paying quarterly estimated taxes, this is all part of that because you're allocating that money anyway for the IRS down the road, but you can repurpose it to purchase assets like this, right, to deploy in a different manner.
Yes, that's absolutely correct. I'll use my personal experience as an example for the listeners, and that is my wife is a W-2 employee, and we had changed the withholdings on her paycheck because we have so many expenses, right, through the depreciation that we get on these assets that she doesn't need to be giving that money to the IRS out of every paycheck because we just be getting a big refund check at the end of the year. So instead of giving them money to basically borrow from us for free, we have taken her withholdings down to very little. And we have this now surplus of cash that we are using to buy these assets. And then I used to pay my taxes quarterly, but I no longer have to pay them quarterly because I don't have really much of a tax bill anymore. And I am now using the money that I was setting aside to pay those quarterly taxes to buy my assets. So that's the nice thing that we offer to our
Mm.
clients is that we can effectively make it a net zero impact to the household cash flow. It really truly is a repurposing of the same dollars that are going out the door anyway. It's just going into an asset that you now own and then can generate cash flow as well as these underlying tax benefits. And I think I probably one of the rules of the game that you always talk to your listeners about is how do you acquire more assets, whatever that may is. It stocks, is it bonds, or is it something like owning a solar asset on a residential home? Whatever it may be, acquiring assets is key. And if you can leverage money you have to spend to do so, it's a very smart decision.
No, it's great, and and this is why, and there's certainly a mix in this of listeners, whether it be business owners, but I think more and more I'm talking to folks who are successful W-2 employees, like you mentioned your wife, and they just run out of options to find investments outside of the market that would give them some tax benefits, right? Their CPA might be telling them to defer more, and or maybe they've even maxed that out, so they're running out of options here. And we often talk about starting businesses, and there's certainly benefits to doing so, but that is daunting for some people who are in their jobs to even consider. So this is a really unique option to get into that sort of side of the investment world, and not have to do as much heavy lifting. And so for this though, to be able to get some of the tax benefits, there is some things they have to do, right, Jesse? What do they have to do to get into this? Like, they still have some level of activity.
Yeah, it's very discreet, I will say, but you don't get something for nothing, right? And I think one of the things you probably talk about a lot is the level of time commitment relative to the yield that one is getting. And I would say that with our investment strategy, you're putting in a very low amount of time, but you're getting maximum yield. And again, I always come back to saying, and it's using money you have to spend anyway. So that's likely the first place you want to start. So we, as I mentioned, sell these assets into a business entity that our clients set up. So the very first step is establishing an LLC. And many of our clients had never had an LLC, to your point,
Mm.
such as W-2 employees. So we help them set that up, get all the necessary paperwork. It's actually very simple to do so. It seems that the idea of it is bigger than the actual execution of getting it done. And then the nice thing about this strategy is that it can offset both active and passive income. So for your listeners out there that are, maybe a really high net worth individual who's in real estate, they have passive sources of income. This will take care of that strategy. But a lot of W-2 earners and the vast majority of listeners are generating active income, things like stocks and bonds, selling a company, et cetera. And so this strategy does work for active participants, and there's very few strategies out there that do. And there is one requirement. There's a nice piece of code in the IRC that says if you're the sole owner of the business, and the IRS treats those who file their taxes jointly as one person. So those two individuals in a household can offset both of their tax liability in that household. And if they're both W-2 employees, as long as the combined household is putting in 100 hours per year, and that is roughly 2 hours per week. Okay, just running the day to day of the company, which again, to your point earlier, we turnkey most of this, so it's very discreet. I think on average 2 or 3 hours a week, reading the contracts predominantly, looking at the assets that they're purchasing. We walk people through doing virtual site visits. We have a whole program catered to helping ensure that people can meet this requirement because that's sometimes the question we get asked. But when you look at relative to the amount of time that you're putting in at that 100 hours for the entire year, relative to the amount of savings that you're getting, and you look at that on an hourly basis, relative to the hourly that you're making on an annualized income, this is always for our clients the single best use of their time on an hourly basis. And so when I say that, I mean you're making more money per hour with the solar business than you are with the other business. Of course, we know the other business is how you're making your livelihood, but we use that mathematical calculation to show people, anyone that's shy, oh, I don't know if I have 100 hours. Well, would you have 100 hours if you made this? And most people go, oh, I see it now. Yeah, that makes sense. But we provide a log to all of our clients that has the vast majority of activities in a year one might work on, and they fill out that log contemporaneously. And as long as they're happy to do that, they can offset all forms of the income. And obviously, this will also offset any taxable income, so cap gains, ordinary income, etc. This strategy can be applied to all of that.
That's great. That's great. No, that's a great explanation. So thanks for that. And a lot of this is for educational purposes, right? Just to give people an opportunity to learn more about this, and obviously uh, to explore it with Jesse and his team if there's interest. But always like to just share the balance to it, because there are risks to everything we do, right? Especially when we're putting our money and investing and starting businesses, for sure. So obviously the time commitment is there, but one natural question would be, so is this, what's the audit risk for this? Everyone's fearful of an IRS auditor coming by, and now I'm going to be subject to that. So what would you say to folks who maybe have that concern?
Yeah, I think it's a very valid concern. It's one I had myself, when I first looked at doing this. And I think that the fear of that, again, was bigger in my mind because I just didn't know, feel of the uncertain, feel of doing something new. But then, I hired the appropriate tax counsel and the CPA firms in the industry, and we got very comfortable that everything here that we're doing is highly codified. We're just following the rules and regulations that the IRS itself has outlined. And then, of course, there's state legislation because these assets also benefit from state tax benefits as well. Many of the states follow the Internal Revenue Code. Others have different provisions. So we know what those are in each state. And we're just following those to a T. So there's not any really, I'd say, ambiguity here. We're following the code. The IRS, as you mentioned, they have this in place to incentivize people like your listeners to invest in this type of asset class to help generate more renewable energy in the United States. And so, fortunately, we don't have any history of any of our clients going through an audit or being audited for this. And we're dealing with clients who are, maybe repurposing 50,000 and some who are doing, 6, 7 million or plus, a year. So we don't have any history of that. Obviously, we don't know and aren't privy to all the other business dealings of our clients. There may be other things that flag an audit. Maybe it's just a random audit, but we have structured this in a way that it's codified. As long as our clients are obeying by those guidelines, we don't see much of an issue, and certainly don't have a history of that at all.
Yeah. All right. Great. Thanks for that. Yeah. And that's why you got to learn these things, folks who are interested in this, is because I think, there's risks in everything we put our money to, even if it's sitting in a bank account, right? We've seen more recently, especially if you have a lot of it. So there's risks everywhere, and the more you learn about these things, I think the risk goes down quite a bit, and so you at least get comfortable and confident that you're putting your money into places that are going to get you what you expect. Anything else, Jesse, you think is worth noting around kind of what to consider as someone's thinking about this? Anything else that comes to mind?
Well, I'll just piggyback on something you said earlier, and that is I remember a colleague of mine giving me a quote that really resonated with me, and I was like, don't be too busy to get rich. Like we're all trying to grow wealth for our families and preserve and take care of them. And some of us may be fortunate enough where it's multi-generational. And I would say that time is our biggest commodity, and sometimes we don't use our time in the most efficient manner. And I would say, scheduling some time with you, is time with us to just learn about this. Some people might dismiss it at first. Oh, it sounds too good to be true, or oh, I'm not really sure. I've heard other things about solar. I'd say keep an open mind, because we have clients all across the board. They're not just people who are passionate about the environment. Of course, we have them, but we have a lot of people who are diversifying their portfolios because they see it as a very smart business decision. So I would say take the necessary time to learn. We have learned running this business that even some of the most ultra high net worth individuals don't have really strong tax mitigation strategies in place. And if you are one of those listeners who does not, this could be a really good entrance into learning about the options you have available. But take the time, because saving the money is crucial, and it's part of your wealth management strategy.
No, well said, well said. Listen, I heard a quote from someone in my network. It says, "When it sounds too good to be true, dig a little bit deeper." And so this is one of those areas amongst a whole host of others that, you do need to spend the time. But, for often what I found over history is when you do that and you find these sort of unique nuggets and areas of opportunity, they are just open up a whole nother world. So I really encourage people to for those who are interested to certainly reach out. And Jesse, how would it be best to sort of connect to you anyway if people are interested?
Yeah, thank you for that. So, our website is inception.financial. And on our website, there's a contact us link, and you can choose a Calendly time that works for your schedule, and we can set up a brief 30-minute call. Can also be reached at jesse@inception.financial. That's my email. And of course, anybody through your network, Tom, you know how to reach me as well. But that would probably be the easiest way to get hold of us if you'd like to get some more information.
That's great. Awesome. Definitely, we'll put that in the show notes and definitely continue our relationship and partnership here. One thing before we kind of conclude this podcast, one thing I want to ask you. I know you've had a little time to vacation with family, which is awesome, and I appreciate you spending some time with me today while you're doing that. Outside of maybe your money and investments, what's another area of your life that you feel like you have some wealth and riches in? Whether it be your family or just your mental state. Always curious to see how others are balancing life outside of just their money.
No, that's a really great question. I would say, of course, I'm very grateful to have an extremely close family. We just got back from a family gathering of 60 people yesterday, in fact, some who we haven't seen in like a decade because, it's extended family. So that's something that's very important to me. But also, I have been very fortunate in my life to not only pursue my passions, but also pursue the things that I am passionate about and that I feel is contributing something beyond myself. And I've been very fortunate that I've been able to contribute to what I call a world worth inheriting. We all have different value systems in how we see things, whether that is helping people achieve their financial success, help them grow for multi-generational aspects, or whether that's because, we feel it's good for the planet. Those are things that I have chosen to dedicate my time to, been very fortunate to do so. And that's a very big reason of why I helped found this company. Was I'd done very well financially already. I wanted to help individuals like your listeners, and I wanted to be a part of something way bigger than myself and hopefully leave behind a really lasting legacy.
That is absolutely a beautiful thing. Yeah, and I think it's something. I think certainly I could tell it in your voice the passion around it, and we bring our talents and passions into the fold here. I think it makes life a little more interesting and hopefully more impactful for those who come after us. So something I definitely subscribe to as well. So thanks a lot, Jesse. I really appreciate your time, your expertise. I'll see you in the next movie you're on. I love that. I didn't know that piece. So, keep that going. Maybe we'll see you in the next sort of stage in life. But thanks for joining me today, and really appreciate your partnership.
Yes, thank you, Tom, and thanks to all your listeners for tuning in today. Have a great week.
Thanks for joining me on this episode today. I really am grateful for you as listeners to the Perennial Pride podcast. I hope you're getting some tremendous value out of it and hopefully pushing you along your journey to financial freedom. I put this podcast together really to help you get more educated around your finances so that you feel empowered to live the life that you really want. And if you like the content that you heard today or watched, then I would encourage you to go to my website, perennialpride.com. There's tons of other content there. And you can access my book, Wealth Beyond the Numbers. You can buy it there on my website. It's a aggregation of a lot of great tips and tools I've learned to not only build my wealth in my accounts, but build wealth in my life. And abundance and joy, and something that has a lot of my experiences in the journey that I've been on personally. Hopefully that can be also of value to you as you sort of move forward. So thanks again for being a Perennial Pride listener, and we'll see you on the next episode.